Broadcasting live from the Business RadioX studios in Atlanta, Georgia, it's time for Atlanta Business Radio. Brought to you by OnPay, Atlanta's new standard in payroll. Now, here's your host.
Lee Cantor here, another episode of Atlanta Business Radio, and this is going to be a good one. But before we get started, it's important to recognize our sponsor, OnPay. Without them, we couldn't be sharing these important stories. Today on Atlanta Business Radio, we have Stephen Gu with Gu & Company. Welcome, Stephen.
Hey, Lee, thanks so much for inviting me.
I am so excited to learn what you're up to. Tell us about your firm. How you serving folks?
Okay, we are a CPA firm, but we structured our firm a little bit different. Majority of the small CPA firms, they are more, tax compliance focused. Basically, helping people file the returns. But we are a little bit different. We are focused more on the tax planning. I don't know if you know the difference between tax preparation versus tax planning.
I've interviewed a lot of people over the years and a lot of CPAs. And like you said, a lot of CPAs, their only concern is doing your taxes. And then you give them information, they fill out a form, and that's your whole entire interaction with them.
Exactly. So majority of the CPA firm, just like you said, there's a focus on compliance, and basically, you got the information after the year end, right? You give them your W-2, 1099s, and the financial statement, then they calculate those, they put in the software, calculate it for you, clean up, and then they send it to IS. That's what the tax preparation is. But our work is we are more focused on, the planning. We do it before the year end. We look at your personal tax situation, look at your business tax situation, and then look at, the most recent regulatory changes, right? Look at your legal entity structure. Is a C corporation, partnership, Schedule C, Inc., which will work for you the best. We look at a retirement, look at the insurance, look at the most recent tax law changes, Inflation Act, CARES Act, Trump tax cut, all those. Then we come back with certain strategies, certain actions the taxpayer have to do. They have to change the fact so that they can change the result, right? Once they implement those strategies, then we were able to help them to save taxes at the year end. So that's what we do. That's how we structured our business.
So does that mean when you're working with a client, you're not just waiting until probably around now to just get a pile of documents so that you can input that data into a software program to spit out a tax return, that you want to have conversations with your clients throughout the year so you can kind of maximize the tax situation on behalf of the client, and also at the bottom line, make them more money at the end of the day.
That's exactly right, Lee. So if you think about it, lots of CPA firms, they will say, we will do a year-end planning, right? That's very common. But typically, you probably personally experience that too. There's a year-end planning, but what really the year planning means, for lots of time, they will say, okay, Lee, I'm sorry, you made too much money this year. You have to plan to write a bigger check in January, right? When you pay your Q4, when you pay your Q4 estimate tax payments, right? That's what their tax planning is. But instead of doing year-end planning, we are focused more on the year-round tax planning. If you really think about it, if you want to really proactively manage your taxes, there's multiple touch points, right? Either in March or April, you have to think about, do you have to file your extensions for your business or your personal return? And then if you file those, then you have to really file your return in September or in October, right? Those are 4 touch points already. But you as a business owner, you are required to calculate your estimate tax payments every quarter. You're supposed to make those quarterly estimate tax payments, right? So add those 4, that's 8 touch points, right? And besides, during the year, your personal tax situation will be changed. You probably, your kids went to school. You think about to purchase another rental properties, or you're going to sell your residential house, right? Or your business situation could change, right? Are you adding the partners? Are you going to invest in another entity? Do you do lots of research and credits? Do you have any R&D costs, right? Or are you acquiring building? Lots of things going to happen during the year. So our way is why you do year-end planning. When you do the year-end planning, things already happen. It's too late to change anything. So we have to focus on year-around tax planning. And that's how we serve our approach to serve our clients.
Now, who is your ideal client? Are they business owners? Are they just wealthy people? Are they executives at corporations? Like, what's your ideal profile of your ideal client look like?
It might be small to medium business owners. Because for W-2 owner, really, there's not too much you can do to save your taxes, right? You have W-2, you pay taxes, and the max, only a few things, maybe you max out your 401k, right? Really not too much deductions you can do. But for business owners, there's lots of strategy available. As a matter of fact, I wrote a book, we call it 90 strategies. Those are common strategies you can, every business can consider and help them to max the deductions and reduce.
So if you're a business owner and you're listening and your CPA isn't suggesting some of those 90 deductions, it might be time to think about getting a new CPA, right?
Exactly. It has to be a very proactive. If you think about, I always use this example to tell my clients that really you and me, we are paying more Prime membership fee than Amazon pays its taxes. Back in 2018, Amazon paid zero taxes, despite their revenue was close to $20 billion. They paid zero taxes. Not only they paid zero taxes, they received $125 million tax credit back. Right? So what does this mean? This means your tax liability, it's not a function of tax preparation, but it's a function of tax planning and a function of how do you proactively manage your taxes? Look, for bigger company like Amazon, they have maybe hundreds of tax advisors help them to do tax planning. When I was with Big Four, and in my background, actually, I was both a tax lawyer and a CPA. My firm is a CPA firm, but I went to law school and I'm a tax lawyer. So when I was working for Big Four, Amazon, bigger company, multinationals are our clients. They pay us lots of money to just do the tax plannings. We call it tax advisory work. Every Big Four, I think every Big 10 large accounting firms, they always have a special group. They call it tax advisory group. Typically, that group, you will see lots of tax lawyers, lots of CPAs, right? And they just do tax plannings, and that's how they save money. They think about where to put their IP, to register a foreign company at a Cayman Island, right? How to do the treaty shopping. That's how they save taxes. It's all about tax planning. It's not about just tax preparation.
And then part of that, you mentioned the words tax credits. There's opportunities to leverage tax credits to your benefit if you know about them and if you know how to, put your business in the right position to take advantage of them. But that's not something a typical business owner would know by themselves. That's why you need to hire an expert to help you through that, because I don't think the IRS are necessarily bad guys trying to just take all your money. I think there's a lot of opportunities there, and they give you a lot of opportunities to save a lot of money or even get some tax credits, but most people just don't know about them.
Exactly. I always tell our client, IRS actually loves you. IRS loves you. Here's why. And if you really look at the tax law is actually written to reduce business owners' taxes, right? Tax code is nothing but a collection of juicy tax deductions and the credits and the incentives for business owners. And there's tax policy behind that, because the government wants to, let's say they want to develop low-income community housing, right? They wanted you to invest, they wanted to develop the in our Chambly, there's the area called an opportunity zone area now, because they want to develop that area. So that's why they give you incentives, right? I don't know if you heard about it called an opportunity zone, right? Let's say if you have a capital gain, you sell your portfolio, you sell a property, you have certain capital gain. Now you can put those capital gain into those opportunity zone area, and you do not have to pay your capital gain immediately. Your capital gain got to get deferred. After you hold that for a few years, typically more than 7 years, you get an additional 15% discount. So let's say you have $1 million. Now, after 7 years, you only have to pay capital gain on the $857, right? Get a deferral, get a deduction. And what's even better, like if you invest in the opportunity zone, let's say you invest in another business and you sold that business, after 10 years later, you sold that business, you make additional $1 million. Those $1 million are exempted. You do not have to pay taxes, right? And why the government, give you those incentive? Because they want to develop those areas, right? Let's give you another example. This is how I saved one of my clients, close to $10 million taxes. If you have a small business, right? Especially for like hyper growth, or you have technology company grows very fast and you have potential very big exit, it's always better to consider what entity structure you want to establish, right? For example, if you do an Inc., right, then it will allow you to make so-called a small business entity election, right? Under that, once you make that election, if you exit, you can get the sum up to $10 million will be exempted from taxes, right? So why the government try to give you that incentive? Because they try to encourage people to invest in startup companies and hire more employees. So there are always a tax policy behind that. Let me give you another example. For example, if you export, right, they allow you to establish another, almost like paper company. You can sell the product to that company, and that company export to another, to foreign buyers. You can get a reduced rate. And there's another one called a guilty tax, right? Or so-called intangible. If you sell intangible products to other countries, you get a reduced taxes as well.
Now, when you're working with somebody, and you're I think in your mind, you want to be a partner, right? You want to be part of their trusted advisory team. You want to be somebody that they are looking to for advice throughout the year. Or do you also work with, because I'm sure a lot of the business owners you work with, they also have financial planners and wealth advisors. Is it something that you work with those people as well to communicate, at least to understand what's happening on that side, so you can really have more information to do what you need to do to help your client?
Absolutely, King. Absolutely, Lee. We work with financial advisors very closely. We partner with very big companies, Morgan Stanley and Merrill Lynch, all kinds of typical financial advisors. And I think the tax advisor should be considered as part of the financial advisor, because for tax, tax is a very important way to help people to build up their net wealth. Now, I don't know if you heard a book. Tony Robbins wrote a book about like a money mastery game. Money like master the game. It's a pretty like 600 pages book. But in his book, he argued that tax efficiency is one of the simplest way to continue increase the real returns of your portfolio. And the tax efficiency equals faster financial freedom. And if you read the book, he spent at least 2 chapters talking about taxes, right? If you really think about this, how much tax we are paying, think about it. We have to pay income tax, we have to pay real estate tax, we have to pay sales use tax, right? All those tax adds up together. That's almost like a 50% goes to the taxes, right? And if we really think about that, 50%, let's discount a little bit. Let's say so for small business or just average taxpayer, at least you will pay 40%, right? If we really think about that, 40% means, that is 3 hours a day. right? 40% times 8,
Right.
right? That's about 12 hours a week, right? And let's say average American works for 30 years. Let's say you start at 30 and you retire at 60. That means you spend 12 years out of your 30 years working for IRS alone. That's like lifetime prison, right?
Yeah.
So that's how much damage the tax causes to yourself. If you really think about it, like you go to work, you spend 3 hours working for IRS alone. Right?
Yeah, and that's why you need to have experts and trusted advisors that can help you, because all you do every day is think about this, where a business owner is thinking about their business. You need somebody that's kind of watching your back when it comes to this type of the expertise that you have. It's not something that a regular person, I don't think, can do, with a TurboTax software program, as well as somebody with your experience and knowledge and team behind it.
Exactly. And the number one reason we feel small business owners are overpaying tax, it's because of their mindset, because they don't know the difference between tax planning and the tax preparation. Right? And they didn't realize the impact, how much impact it's going to cause to their net worth build up, right? And I would go back to the Tony Robbins book one more time. There's one example. It's very impactful when I read it. He said, suppose, let me do a calculate. Let's do a quick math, right? Supposedly you have $1 and you get 100% return every year. So you got a $1 first year, $2 next year, and a $4 in the third year, and the $8 for the fourth year, right? Continue the math. After 20 years, guess how much money you will have, cumulative amount. Just give it a wild guess.
It's a big number, because I know the power of compounding is the secret to success. So I don't know the number, but I'm sure it's very, very, very large.
Let me give you a multiple choice. Okay, do you think it will be between 10,000 to 50,000?
No, it's hundreds of thousands to $1 million.
Okay, you're very close. It's $1.07 million. 100% return, compounding 20 years, $1.07 million. But if you have to pay tax, 30% tax every year, same formula. Right? You get $1, you pay 30% tax, and then you get a double return, right? And then you pay tax every year, 30%. Guess how much that number will be?
That number would be, is it not just 30% less?
No, you have to pay every year.
Oh, so every year. So that's compounding as well.
Yeah.
So
yeah.
What, 300,000?
Not even that. It's $27,000. 27.
Wow. So you're doing all that work and you're not getting the return you could if you had better advice.
Yeah. So the tax actually causes 50 times differences on your, right? $27,000 versus $1 million. Close to 50 times differences. That's why Tony Robbins in his book, he always argue like tax efficiency is so important, because it's going to cause like 50 times differences. If you can manage to grow your wealth at a tax-free or more tax-effective way versus you pay tax every year, after 20 years, the result will be huge.
So if somebody wants to learn more about your process and your firm, is there a website they can go to have a conversation with you or somebody on your team?
Yeah, they can go to my website, GU as a guru without a U, gucpagroup.com, or they can email me at steven@gucpagroup.net. And if they if they include a Business RadioX, I can give them a free assessment.
Great. So, well, thank you so much for sharing your story. You're doing such important work, and we appreciate you.
Thank you, Lee, for inviting me. I appreciate it.
All right, this is Lee Cantor. We'll see you all next time on Atlanta Business Radio.